Welcome to the StockOptionAssassin.com's free trade of the week. My name is Eric, and today is Monday, August 3rd, 2015. And in this week's edition of Trade of the Week, we're going to take a look at a range-bound trade on the SPX, where we're basically looking to make about 15 to 20% over the next 3 weeks, as long as the market kind of continues this choppy action we've been seeing. And if you haven't done so already, be sure to subscribe to our YouTube channel and like us on Facebook for more technical analysis videos and strategies. So again, let's look at the SPX. And like I said, we're looking for a range-bound trade. And I've zoomed out a little bit. You can see really as of February of this year, we've been in a range from about 2130s as being sort of the highs and the lows around 2040. So I want you to look at these two little dotted lines. This is my break-even part of my Condor spread that I'm going to look at. And we're going to look at here in a second. And really, giving the falling commodity prices, rising rates, yet job creation, all that stuff's going pretty well. I'm really just kind of expecting the market to continue to sort of stay in this range. And right now we're kind of smack dab in the middle of the range. So let's take a look at the Condor spread I've set up. This is a long call Condor. This is not an iron Condor. This is a long call Condor. This is a debit spread. So we're looking to purchase this spread and sell it back later for a 15 to 20% gain, preferably in about 3 weeks. And so we just closed one of these spreads from last month, and we actually made 24, 25%. So, but ultimately the low hanging fruit on this one is the 15 to 20%. So again, here's the spread itself. These are the strikes I'm looking at, and I want to just kind of show you the range here. And one of the reasons why I sort of structured it this way is because this is going to contain most of the high open interest strikes on the SPX, and we'll look at that in a second. But basically, I'm looking to buy the 225 call. These are September, by the way, September 225 call. Sell the 2025, sell the 2045, sell the 2145, and buy the 2160 for a net debit of, right now it's trading for about $12, right? We have a limit order with our members. We're trying to get in for $11 or less. Right now, our limit order is at $10.50. We're not filled yet. We may bump it up to $11. And the reason why is because right now, as we looked at the chart, we know we're smack dab in the middle of the spread. So the profit line here, this is the white line, is basically telling us that if the market were to rally, back up to 2130, we're going to lose. If we were entered in the trade right now, we would lose a little bit of money. It's still well within the parameters, but we would sort of give back some of our profit, or start to lose money. And if we sold off, we would actually lose money. So what I want to do is I want to keep a limit order sort of below this peak, so that if we were to rally from here, our limit order would eventually get filled, with the idea that the upper end of this range is going to hold, and we would come back in, and vice versa. If we were to sell off, we could get a better price for the spread, with the idea that the lows hold, and then we would rally back up. So again, I think that we stay between 2037 and our break even is 2152. And actually our max profit area is between about 2045 and 2145. So why is that important? So let's go to the option chain itself. And remember, we're buying a September spread, but I want to look at the August options, because this is where the stock, or the index in this case, may actually pin in the next 17 days, right? So I'm looking at, on the low end, there's a lot of open interest down here at the 2050 strike, right? So we have over 16,000 calls, 57,000 puts. So, the market could sell off. We could tag this level before August expiration. We have a lot of open interest at the 2075. And, we have 26,000 puts, almost 19,000 calls. The big level of the year really has been 2,100. This is where we were sort of sitting around last month, well over 100,000 if you combine those on the 2,100 strike. And on the upper end, we have a lot of open interest at the 21.25, right? And it's really not that much. It's mainly on the call side, but really not a lot on the puts. And same thing up here. You'll see a lot of calls up in the 21.45, 21.60s, but there's really not a lot of puts here. So we're focused on the strikes that have a lot of open interest on calls and puts. So again, those strikes are 20.50, 20.75, 2100, and 21.25. Okay, so 20.50 being the low, 21.25 being the high. Let's go back to the chart. My break even is 21.50 and my low is 20.35. So over the next 3 weeks, if the market stays in this range, this spread will increase in value by about 10, 15, 20%, and volatility is going to play a factor, so it fluctuates a little bit. But ultimately, if it sells off, we think it holds. It holds the range, and if it rallies, it holds the range until otherwise proven wrong. So again, those strikes are 20.25, 20.45, 21.45, 21.60. We're selling the inside strikes calls. We're buying the outside strikes for a net debit. We're trying to get in for $11, so we're going to give it a few days. And that's our trade. Hope you enjoyed it. You guys have a great night. We'll see you at the next update.